So Europe has been one more thing that people have been looking at in terms of a source of volatility in the markets that is causing a lot of anxiety. As we saw with the States 3 years ago, Europe now is creating a lot of concern amongst investors that every time they put a penny into their RSP, that penny could disappear. And in fact, if we look over the last 12 years, the Toronto stock market has gone down 1 in every 4 of them. So 25% of the time in the last 12 years, a dollar put in the stock market lost value. And investors now are starting to look at that and say, well, that's a reason probably why I shouldn't put money into my RSP. If it's going to be a losing game, then why would I want to do that? I'll just keep the cash in my bank account and I just won't play that game at all. And obviously that's a mistake. Canadians need to put money into the RSP. This is, after all, the retirement plan, especially for those that don't have pension plans. At the end of the day, for a nation, this is what we need to do. We need to save. We can look around the world and see cases where countries that don't save end up in the problems that we're seeing, for example, in Greece and Italy and Spain. So it's very important for investors now to look beyond what's happening in Europe, what happened in the States, and maybe what's going to happen elsewhere around the world next year or the year after, and start focusing on the fact that when I put money into my RSP, it doesn't mean that I'm putting money necessarily in the stock market. And what we mean by that is simply that when I have an RSP account, it's probably not going to be, or hopefully not going to be, 100% invested in the equity market, whether here in Canada or elsewhere. It's going to have a bit of balance to it. It's going to have money in the stock market for sure. It's probably going to have a lot of money in bonds, GICs, bond mutual funds, or whatever. And that's the balance that investors have to look at. And I think going forward, and especially now as we go into RSP season, investors now have to say, what is the appropriate asset allocation mix? How much risk should I have in that RSP? How much money should I have in the stock market? And basically focus on investing to that. And I think if they do that, we remove a lot of the emotion going into the RSP season, and we get away from this mentality of, I'm not putting money in the RSP this year because things don't look that well around the world.